We're going to be talking about some really good information today involving taxes for business owners. So, I'm going to wait for my guests to join. So, many of you know me as an attorney who focuses a lot on the business aspect of the law, right? So, business owners, tips and tricks that helps business owners grow and protect their brand, whether it's talking about contracts, intellectual property, setting up your company the right way, your LLC, your corporation, all that stuff. But we never really get too deep into the taxes because I am not a tax attorney. And so I get so many questions about taxes as it relates to, you know, selecting the type of entity you want to use for your business. Um, yeah, I mean, you name it, I've heard it. And so today I wanted to bring on a friend of mine who is a tax attorney, and she does know, all the little tips and tricks and legal tidbits um, that you guys would need to know when it comes to filing the taxes, running a business, how does tax play a part into that, all those good things. So I am excited to have my friend join with me. And we're going to get into a conversation about these taxes. Because listen, even though I'm an attorney, because I don't do tax law, oftentimes I feel just like the rest of you guys. Like, you don't know what the heck is going on when the taxes get involved, right? It's just not my thing. And so I can relate to many business owners when it comes to filing taxes, when it comes to questions about taxes. Shoot, I'll be having the same questions. So today we're going to get some of that stuff answered. Let me see. Waiting for our guests to join. So, most of you guys are probably going to watch this back once I post it on my page. But for those of you guys who are going to be joining us on the live, feel free to put some tax questions in the comments and we'll see if we get them answered for you. Mhm. I should probably turn my phone on D&D. All right, so our guest looks like she's ready to join. So this is my friend. Her name is Michelle Wright. She's a tax attorney. Finished up school in 2018. with her law degree, and then went on to start studying for her LLM in taxes, which is like a master's degree in tax law. She's very well versed, extremely knowledgeable, someone that I often chat with when I have questions, and she never misses. So I'm going to invite attorney Michelle now, and we can get this ball rolling. My latest, my greatest inspiration. Let's see. Michelle, can you hear me? I can't see you yet. Mm, 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 mm. What's going on, Jay? Oh, we having technical issues. Marquita, I don't know how to add you. It says you've been added, but I'm not seeing you showing up on my screen. I don't have a case, but hi to you. Well, that's good. You don't have any cases. I'm going to remove you and see if I can add you back. My latest, my greatest inspiration. All right. There
Here
you
we go.
go. We
There
got
we
you.
go.
Good
All
afternoon.
right.
How are you?
I'm good, and you?
I'm doing good. We
Mm,
we can't see you though. Your screen is blank. You
how
having
is okay?
technical you having
Oh,
technical issues too?
yes. You know how technology is.
Yes, Friday. Well,
Oh, okay. I'm trying to. Let me see. Hold up. No, my video was on. So why is it not sync?
let me see.
Hold on 1 second.
It should be a button like over to the right. There you
Okay. Can you
go.
see me now? Okay.
Hi,
There we go.
Michelle. How are you?
Doing well in yourself?
I'm doing good. It's good to see you. It's been a long time.
I know, right?
Yeah.
Life
You
has
having
been going.
a right? Are you having a good Friday?
I am because I don't work on Fridays.
Oh,
So
you lucky. Okay.
yeah,
All right. Ooh,
yeah.
ooh.
I do Monday through Thursday, 10-hour days. So I don't work on Fridays.
Okay.
And if I ever have to go back, I don't know how I'm at.
I know that's right. We need a little extra time to do what we need to do, right?
Right, right. So
A
I
lot,
enjoy my Fridays off.
right? I was gonna say a lot of people don't really understand how much work. us attorneys that we have to do and how stressful it can be. So when we get time off, it's golden. We need that
Yeah.
reset.
Yeah. Well, and it's nice to have a day off during the week where you can still handle business as opposed to, you get to Saturday, you want to rest, but then Sunday is like, I got to prepare for the week. And so having that Friday to be able to handle business, rest on Saturday, then be like, okay, I'm refreshed on Sunday
Yeah.
evening. You don't get the Monday scaries on Sunday evening because you're just like, oh, I got to go back to work. So, yes.
Yeah. Well, thanks for joining me
Yeah.
today.
Yes,
Um,
absolutely. Thanks for inviting me.
yeah.
I am
Yeah,
a tax nerd,
absolutely.
so I will go off on tangents, so you may have to stop me.
Yes, 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 yes. Most people gonna be rewatching this when I post it on my YouTube. But
Mhm.
yes, Michelle is a tax nerd. This is somebody that I just love to talk to because she always knows the information, right? So a lot of people don't understand that there's different type of attorneys. Most
Yeah.
people grew up in a household watching like Law and Order, so all they know
Mhm.
is like criminal, right? And
Yeah.
so when I presented myself on social media, people started to understand, okay, you have business attorneys and things like that. And I would often get questions regarding taxes and,
Mhm.
business structures and how taxes play a part into it. And I'm like, look, I only had this much information on that. That's not my thing.
I feel you on it. When I was in law school and I came home for a break, my family was like, "All right, so you're gonna be a defense attorney or a prosecutor?" And I was like, "Neither."
Neither.
It's like there are so many other areas of law that they have, and I was just like, "I'm not doing any of that." So, me being in tax law, when people come to me like, "Well, can they do that?" I don't practice that area. I don't do
Yeah,
I don't know. It's like, "Well, aren't you a lawyer?" Yeah, but do you understand how many facets and how many moving parts and how many areas of law there are? Like, no.
it's a
I
lot.
can look something up. You can go on Google and look up
Oh, I can
a
refer you
code.
to somebody else, you
Right?
know?
It's like, they have, tenant questions, property questions. And I'm like, Texas property code, hit it up on Google, read up on it, when they think about the criminal code, I'm like, yeah, I don't do that. I do tax law. And then they're like, oh, do you file taxes? And I'm like, no, sweetie, that's below my pay grade. I do the words, not the numbers. Okay. So yeah, you have to kind
Okay.
of break it down to
So
let people
let's
know, you
explain that
know,
explain that for the people who are gonna be watching. So that is probably something that's a common misconception. When you
yeah.
tell people you're a tax attorney, they think that you're going to file the tax return, but that's not what you do.
So there are some who do file taxes. So let's, make that clear. But mainly most tax lawyers, we're dealing with tax law. We're dealing with the IRS code. We're not really dealing with filing your taxes. So,
Okay.
we may be able to review a return and tell you, oh, this is what this means and this is where it is in the code. But normally, when you're dealing with the actual filing of your return, you're going to be looking at your CPAs, you're going to be looking at your bookkeepers, you're going to be looking at your accountants. Now, there are some lawyers who are CPAs, and so they'll do a little bit of both. But usually, if you are hiring a tax lawyer, it is because you have already filed your taxes or you have failed to file your taxes. And now the IRS or the DOJ, the Department of Justice, is coming after you, or you owe money and you're having to go to court to argue, no, I don't owe this money and this is why. Or yes, you owe me money and this is why, as opposed to filling out the actual return. So yeah.
Okay, so that makes sense. All right, so most of the people that are going to be watching these videos are going to have like a business background. They run a
Yeah.
business. And I know for me, becoming a business owner, one of the most stressful things that I had on my mind was how does the taxes change from me
Mm,
filing as an individual versus now that I have a business.
yeah.
Can you kind of talk about that?
Yeah, so it's going to depend on your structure of your business because you have C corporations, you have S corps, and then you have LLCs, and then you have solo practitioners. So really, you're going to tell the IRS, "Hey, this is how I operate," and based on what you tell them, will determine what tax return you're going to fill out and how you report your income to the IRS. So you're basically telling the IRS how you're going to present yourself to them by determining what your business is listed as. Because you have S corp that could be taxed as a LLC, C corps, and so it just really depends on how you have structured your business, and that's going to determine how you will file your taxes, how you will submit your tax returns. Sorry.
Okay. No, that's cool. So, what if somebody picks a certain, let's say someone picks a S corp
Mhm,
election early on in business. Maybe they just
mhm,
were watching something on TikTok and they didn't really
mhm,
understand
mhm.
how it would play out, and then they don't like that structure. Can they change it, or are they stuck with it?
No, you're not stuck with it, but there are rules on how to change it and what needs to happen to change it. And so whenever you're doing something like that, you need to make sure that you are consulting a tax professional. One second.
That was a big question for me. I know a lot of people were interested in the S corp. I want to say back in during COVID, it was a lot of S corp questions and talks on social media, and a lot of people changed their status to S corp. But many people don't know that S corp filing, it has benefits and perks. Um,
Apologies. You know, I'm at
Oh,
home.
no
So
worries, no
yeah.
worries, no worries. I was just telling them about, like, the big back in COVID, it was a big
Mhm.
boom of people on social media, talking about these S corps and stuff.
Yeah. Oh God, yes.
Yeah, but a lot of people will switch over to it, not really understanding the ramifications and how it's going to play out. So, you were telling us about the ability to change your status.
Yeah, so when you change your status, you're going to have to alert the IRS that you're changing your status, and they have rules that you have to abide by in order for them to actually receive the paperwork and then note it in their system that you have changed. Because, like for instance, with an LLC or a sole proprietor, you file a Schedule C on your tax return, so you attach a Schedule C to your personal return. But with an S corp or a C corp, you may be filing a 1120S, or you may be filing K10s. You may be filing different things, so based on the status that the IRS has with for you will determine what forms they're looking from you. So when you do change, you need to make sure that you're following their rules about how to change and make sure that it is recorded with them, so they're not looking for you to file something else. Because if you go from an S corp to a sole proprietorship, and you file a Schedule C, they're looking like, okay, but where's your 1120S? Like, where's your other form? You didn't file the correct form. Well, we have you down as an S corp, not a sole proprietor. So when you're doing that, it's always imperative to consult tax professionals when you're doing anything with tax. Even us tax lawyers will consult other ones, because and other attorneys will consult tax lawyers, like, hey, help me understand this. I have a group chat of friends who from law school, and one is a HUD lawyer, one is does law with veterans, and one is does criminal defense, and they're all coming to me. Okay, it's tax season.
Right.
Help me understand. I just
Get us
got
get
married, and
us
we need to
together.
file marriage filing jointly. Like, I just had a kid, so always consult someone who's a professional with that and within that realm, because you got to spend money to make money, and this is one of those times where you cannot be cheap, because it will cost you in the long run. So you need to consult someone who actually does what you're looking for, as opposed to, oh, well, they're a lawyer. And it's like, yeah, but
Right.
are they doing what you're looking for? Oh, well, they're an accountant. Yeah, but do they do accounting for large corporations? Do they do accounting for S corps? Do they do accounting for individuals? What is their specialty? Can they answer the questions that you need them to answer? And are you going to get your money's worth? Because you're going to have to pay them. So, because with the IRS, they don't care. They don't care who filed your taxes. They don't care how they did your taxes, because when you sign, whether it be electronically or by hand, you sign under penalties of perjury that you have reviewed this form and that it is correct to the best of your knowledge. So even if your professional did something that's hinky or janky or creative, we say that you were ultimately responsible. So you need to make sure that they understand what they're doing, they know what they're doing, and you're not asking them to do something that's out of their purview, because there are professionals, unfortunately, and I'm pretty sure you and I have run into some where they will take your money
Yeah.
and be like, oh,
Well, you
well.
you talked about tax professionals. Some of them are janky and stuff like that.
Yeah.
So let me ask you, those, some people online will talk about the having a business, how you can, get money back from the government because
Mhm.
you're writing all this stuff off, you're claiming all
Mhm.
these losses. Can you talk more about that? Like, what
Yes.
your perspective on that is?
Yes. Yes. So there's a thing, I can't remember the exact code section, but the IRS will give you leeway when you have a business. They know every year is not going to be a year you turn a profit. But if you're always taking a loss, it's going to, signal some spidey senses to say, okay, is this truly a business or is this a hobby? And if it's a hobby, you can't take these deductions to offset other income. If it is a business, you can take these losses. So when you're doing that, when you're taking all these losses, you need to make sure, one, you need to be truthful. Like, I get it. It is so, I guess you could say, attractive to be creative on your return, because they're just like, oh, well, so and so did this and so did that. And I'm like, but when that audit comes, they don't care. Because if you cannot justify it, it's you're going to owe the money. My tax law professor said something in law school. He says everything is income unless it isn't, and nothing is deductible unless it is. The IRS has the burden of proving that you have income. You have the burden of proving that you are eligible for this tax credit and this deduction, that you took these losses. So if you cannot show them proof, I'm talking about receipts, actual receipts, that, hey, I'm entitled to this loss, I'm entitled to this deduction, then they're going to add that money back. um I knew a young lady who, when she was an auditor, there was a gentleman who took all these losses and couldn't prove any of them, and added that money back. And now you owe a big tax bill. And on top of owing a big tax bill, now you have interest. Now you have penalties. And so, you could have a tax bill where if they just add the income back, you owe maybe 10 grand. But let's say it's at the end of the 3-year statute, going towards the end of that 3-year statute that they have to review your taxes. And now they're going to add that interest and penalties from all those 3 years. And so now that $10,000 tax bill can balloon at 25,000, 30,000. And they're like, yeah, and some payment plans work, but over a certain amount, it's not payment plans. Now it's, no, you need to pay us. Or you can't pay us. Now we're finna lien your business. Oh, you can't pay us, and we can't get a lien. If it's too much and too egregious, now you're going to jail. So yeah, and because one of the things I want to talk about. Speaking of, you can go to jail for owing taxes. Yes, there is a criminal side to it. Most people think, well, I just have to pay the money, and they'll just take my property. No, we know some well-known celebrities who have gone to jail
Yeah.
for failing to pay taxes. All of this information is public knowledge, so I'm not sharing no trade secrets. You can go to Department of the Justice, DOJ.gov, and look it up. Wesley Snipes went to jail for 3 years. He owed, let me see how much, what my notes say. He owed, I think, upwards of like a couple $1,000,000 because he failed to file. And it wasn't so much that him personally, but he probably had people that he was working with, and he didn't keep up with them. And so when you have a business, even if your brand is your business, you need to have check-ins with people who are handling your taxes and your finances. You need to check in and say, hey, it's been 3 months. Every quarter, let's sit down. Let's go over the books. Did you make my estimated tax payments? Where am I looking at tax-wise? Am I paying enough money? What am I anticipating? Things like that. Another one is Lauryn Hill. I think she went to jail for like 3 months. And then there's like multiple celebrities who always get caught up about taxes, and it's like, because they failed to file, but it ballooned so much because 2-3 years of you not filing, and then you're making millions of dollars, and they add all that interest in and all those penalties, and then you get to a certain number, and they're like, yeah, no, we're sending you to jail because this is not something that was unintentional. You have to file taxes. You're not crazy. So you failed to file, guess what? Now it's criminal charges. So in doing that, you have to make sure that you're doing checkups on your taxes as a business owner. You need to do checkups. There are the 1040-ES is the estimated tax payment form, and it has dates on it. So the upcoming date for this year, I think the first date for this year is April 15th. That first tax payment is due. And then there's a tax payment due in June. And then there's one due in October. And then there's one due in January. And so you need to make sure that those estimated tax payments are being made, because if you don't, and you come at the end of the year and you go to file your taxes and you owe more than $1,000, now you have a failure to pay penalty. And it's like on top of what you already owe. And then if you don't pay all that, now you have interest coming in. And then if you don't pay that, now, depending on how long it takes, now you have another penalty. So it just keeps spiraling and spiraling. And what maybe have been $2,000 can easily cost you 10 grand.
Yeah.
Like that. So
Well, I want to
yeah.
ask though, because I know you said a lot. You
Mhm.
gave a lot of good
Yeah.
information just now. So when people think about, taxes and stuff, it seems very scary. So,
Yeah,
but I know for you as a tax attorney, it's not as scary for you because you know
no.
the rules, you know the laws. So let's say someone is in a situation where maybe they owe money,
Mhm.
but they can't afford to pay. What's the best protocol for them?
So if you owe money to the IRS and you cannot afford to pay, you need to work with the IRS to do either offering compromise or to set up a payment plan. You need to be in constant communication with the IRS. Maybe you can't afford to pay the IRS a whole bunch of money, but you might need to go hire you an attorney. You might need to hire you a CPA that can represent you because we have what they call enrolled agents and then circular 30 people. So attorneys, enrolled agents, CPAs, they can basically represent people in front of the IRS. And so you need to get with one of those people, even if you can't afford the huge tax bill, because you need to start communicating with the IRS. I have intentions to pay this. I just can't pay it now. So work with me because if you were silent, it is not good because 96% of the US federal government budget comes from the IRS. They're going to get their money. However they get it, they're going to get it. So ignoring them or running from it or ignore it's not no, it's not gonna help you. So, get in touch with somebody. If you can't use a tax professional, go yourself and say, hey, this is what I can afford to pay. Are you willing to take this amount as a down payment and let me make this payments, knowing that interest and penalties will still accrue, but you're in talks with them. You're not just ignoring it because they want you to voluntarily comply because they don't want to have to make you comply because when they make you comply, that's when jail time gets entered. That's when tax liens start coming in, and that's not a good thing because it is so hard to get those tax liens from. Oh, it's yeah. Literally takes an act of Congress. And I say that in jest, but at the same time, literally an act of Congress because it is just once it gets to that point, they're like, nah, you've had plenty of time to try to work with us, try to communicate with us, and you're refusing to do so. So lean it. So yeah.
Okay, so
Yes.
basically work out a payment plan. Does
Yes.
the IRS do any collection activities outside of putting the liens?
They do. So if you are working with they have revenue agents and they have revenue officers, and basically those two people, those two positions, they are the people who go out to collect taxes. So revenue office collect tax debt. So if you owe money, you're working with the IRS, they're like, hey, coming to get your payment. Hey, coming to work with you again. Hey, like they're the ones who are doing that. So yes, they will attempt to collect the money before they lien it. They will because there are rules and protocols that they have to follow. So they will attempt to collect the money prior to leaning. But if they're not, excuse me, successful, they're going to lien it. Yeah.
Okay. Now I want to go back a little bit. Earlier, we
Mhm.
were talking about business owners
Mhm.
and them selecting different tax statuses with their companies. Based on your perspective, do you feel like there's a certain structure that's best for new business owners?
No, I think it just depends on how you want to structure it, like how you want to get paid and how you want to, what type of business you're running. And that's when it just really goes back to talking with a tax professional. What is the best tax advantageous structure for you, depending on what you're selling, what you're offering? Are you going to be running off of receivables? Are you going to be running off a cash method? What method are you going to be using to receive your income? And how does that work? Because I know with lawyers and you have an IOTA account. So the money goes there and then once you earn it, so that may be different than someone who's in manufacturing or logistics where they're delivering packages and they may get cash on delivery or something like that. So I think it really is just going to go into what type of business you are going to run and what's going to be most tax advantageous for you. And that's again, I keep pushing this tax professionals. You have to spend money to make money. I know it sounds like, but I just started and I don't have money. You cannot afford to not go speak with people about starting your business to do it the right way because if the tax bill comes, that's it. Like you owe it. You got to do it. But you can't go back and say, "Oh, well, I didn't realize or I didn't know," or it's too late then. So it's better to try to get ahead of it and go to reputable tax professionals. I know there's a lot of people on Instagram and TikTok saying, "Oh, I can do this for $199 or I can do." No. We've all heard that if it's too good to be true, it usually is,
It
you
usually
know,
is.
right. Like you think you're going to get some seriously in-depth tax information and business formation for $200? Really? That's the cost of a pair of tennis shoes. That's
Yeah.
not gonna happen. You know, that's somebody's grocery bill for the week. It's like, so it's one of those things where it's like, you know, you want to start a business. And you know, most businesses are going to operate in the red to begin with anyway. Set yourself up for the best, put yourself in the best position because you're going to be taking losses the first year anyway, the first couple of years. So, but if you have it set up strategically, you know, those losses don't feel so, they don't hit you so hard. So, you know, yeah.
Yeah. Now, what about like if there is what about if there's a situation where you have a company being formed, but it's multiple owners? Is there a
So,
certain way that they should go about handling the taxes? Because I know it could probably get confusing at the end of the year when it's time to file taxes, especially when you get the EIN, you only
yeah,
are able to put one responsible party for the
yeah.
EIN. So how would that work? Let's say if it's two owners of an LLC.
So with that, they would need to sit down and decide who's going to, you know, ultimately be the person on the dotted line and then make sure that that person is on the up and up when it comes to business expenses, business accounts, and personal accounts, and make sure that neither one of the founders are making unnecessary draws on the business account. But as far as setting it up for a in a tax advantageous way, it's just going to depend on what they're doing. But they want to make sure that certain things they do with regard to their money is that they're not commingling the money. Because what ends up happening is if you set up as an S corp, right? With S corps, the IRS is like you must pay reasonable compensation, and we all know reasonably prudent person. We've heard that so many times in law school. It's like, what
Mhm.
does it really mean? Well, you know, what would a reasonable person think you should make when you're a logistics company? You know, if you're a logistics company and you're delivering, you know, medicine and you clear 100K a month, reasonably paying yourself 10K might not be bad. But if you're clearing, you know, 30K a month, paying yourself 10K, maybe that's not so reasonable. So, you know, they need to think about like, are you guys going to be taking draws? Are you guys going to be, how are you going to be using the money you get? And that in turn can help determine which way you need to set up your business so that if you're taking draws or you're doing certain things, it doesn't come back to bite you in the butt in the point when it's time to pay the taxes. And so that's when like getting with a CPA or an accountant to say, hey, this is how we want to run our business. What do we need to do to set it up? Because you can also go to a lawyer with these things. I mean, because, you know, we took business organizations, but when it comes down to the numbers and running the numbers, you're more often better going to a bookkeeper, an accountant, or a CPA because even the JD CPA, you know, they're still going to be looking more so towards the legal law side. You want someone who's thinking about the numbers,
Right,
run the numbers. You want
right.
someone who's honed in on the numbers to say, well, you can only take, you know, so many draws doing this. You can only do this so many times, as opposed to from our standpoint, it's just like, well, what does the code say? I'm looking at the code as opposed to like, I don't care about, it's like, let's say I don't care about the numbers, but I'm looking at the code. What does the code say you can do? Code say you can do this? Okay, you can do this, and we'll set up our argument this way. But that account is going to go in and says, yeah, the code says you can do it, but if you do it this way, you're going to trigger an audit. If you do it that way, it's gonna come back to bite you in the butt later on. So in those instances, I would tell people go and talk to a CPA and tell them how you want to run your business, as opposed to, okay, I just want to run a business, set it up for me. No, how do you want to run it? How do you want to be able to access the money you are making? And that in itself is going to help you set up a tax advantageous scheme so that when tax time comes, you don't feel like Uncle Sam just knocked you upside the head. So yeah.
Yeah. So let's say you got two owners of a
Mhm,
LLC. One of
mhm,
them puts themselves on the EIN as the
mhm,
responsible party. When it's time at the end of the year, when it's time to for Uncle Sam to collect or whatever,
mhm.
are they just going after the person that's on the EIN, or are they, do they somehow know that there's two owners and they go after both parties?
So I think in that situation, I'm gonna be honest 100% with you. I'm not sure how they would go after the one if there's an issue with the taxes. I know that the person who's on the responsibility is definitely going to answer for something, but that second one, I think it just will depend on I think the business structure as well. Like what is their um what am I trying to say? What is their
Operating
Board of dir
agreement?
yeah, operating agreement say. Yes, that's what I'm thank you. It's like, what does that say? Like, are they truly responsible for any of this? Because they may go into that, but I know that responsible party is definitely going to be on the
Yeah.
hook. But that second party, maybe not so much. I'm not so familiar with that area, but that is something to look into. Like, who is going to be
Yeah.
responsible if something happens? Like, is it just me or is it both of us? Because with an LLC, it's a limited liability as opposed to a partnership, and partnerships is just like you got to be really, really, you got to get with somebody you really trust when you're doing partnership as
Man.
opposed to LLC. Like it's just like I don't want to say never do a partnership, but you got to know this person. Like they need to be like sitting to the right hand of Jesus if
Right.
you're going to do a partnership with them. But
I mean,
so I
doing
think in
business in general, it
yeah,
can get really ugly doing
yeah,
business
it
with
can get
people.
real. Yes, well, you're dealing with
Um,
money, and
yeah,
yeah, and once money enters the equation, yeah,
you never really know people until you,
yeah,
I say travel, get married, live together, or start a
travel.
business together. Yeah, you never
Travel
really know people
know
until you
people
experience
until
those
you
things.
travel with yes, until you travel with them and you're just like, you knew we were coming here. You knew it was going to cost this much. What is the issue? I
Right.
learned that I learned that in undergrad, unfortunately. I learned and it was a hard lesson to learn. And it's just like, but I learned that you can't travel with everybody. I don't care how great of friends you are. You cannot travel with everybody because certain things you just be like, yeah, if you are a person who likes to sleep in, want to wake up late, don't want to do too much, and just kind of lays around, that's fine. Travel with somebody who wants to do that. Don't travel with the person who's up at 5 a.m. eating breakfast and ready to go for the day because y'all gonna bump heads. And it's just, yeah, so. And like I
Yeah.
said, I learned that the hard way.
And then doing business is the same. Everybody handles
Yeah,
business differently. So that's important.
yeah.
All right, cool. So guys, whoever's name is on the EIN, that's the
Yes.
person that's
So
you're
yeah,
mainly responsible for those
yes.
business taxes. All right, cool. So I know that you mentioned like commingling funds
Mhm.
and the payment structure and stuff like that. Now, when you talk about that, are you referencing don't commingle the business funds with the personal funds, or are you talking
Yes.
about the two business owners? Okay, you talking about the
I'm
first
talking
one.
about don't commingle business funds with personal funds. Do not do that. You can get yourself in a world of trouble tax wise and just legally by commingling those funds. It is never smart to do that. Because, like, again, with the S Corp example, reasonable compensation. If you get paid, your accounts receivable come in and it's $30,000, and then you just start taking draws from that as opposed to just paying yourself. And the draws you're taking are used to pay personal expenses. Well, now those draws may not be classified as business expenses, they may be classified as dividends. And if they're classified as dividends, that is income. That is income to you. Yeah. So, you take a draw, you get $30,000, and I'm just, making up numbers, and you take $15,000 of a draw every month. After 12 months, that's what, almost 160,000. But you're like, I didn't make $160,000. Why am I having to pay taxes? Well, those draws you took got reclassified because they were used to pay personal expenses. No. So pay yourself a salary and leave the rest of that money alone. So, and that's something that accountants and bookkeepers and CPAs are going to emphasize. Do not mix these funds. This is your business account. Leave it alone. If you're going to pay yourself to a personal account by payroll. Set up QuickBooks and pay yourself through payroll. You know, and when you're doing payroll, make sure that if you're doing it yourself, make sure you know what you're doing. And if you're not doing it yourself, make sure that the person that you know who's doing it, they will know what they're doing. Because you have employees and you're supposed to take out their taxes and you're supposed to pay employment taxes. And if you're doing payroll and you're not making those tax payments, that comes back on you. If you're doing payroll and you're not taking out enough, now obviously it's going based off their W-4, but if you're not taking out enough and the employee comes to you saying, why are you not taking taxes out of my check? I'm not a 1099 independent contractor. I'm an employee. That comes back on you. So when you're doing payroll, you need to make sure you know what you're doing or whoever you've hired to do it knows what they're doing. And one of the things that some smaller business owners may run into, you start taking draws out of that business account, payroll runs, employee goes to cash their check. There's no money in the business account, check bounce. And now the employee is looking at you like, my payroll check bounce. Why did my payroll check bounce? And so now they got fees associated with that. And so it could basically turn into this huge thing that could be avoided if you just, one, don't communicate in accounts, and two, pay yourself through QuickBooks the same way or whatever you would use, the way you would pay your employees. Doing payroll that way as opposed to you just taking draws off the account. So
Okay. So that's a good rule of thumb. Don't,
yeah.
I guess so as soon as you create the LLC, what I advise my clients is once the LLC is formed, then and you get the EIN and operating agreement, then go to the bank and open up a business bank account. It's
Yeah, what a
super
business
easy to
account. I
do.
mean, it's so easy. It's not. It's one of those things that it's so easy. You would think that people would just automatically do it. It's just like, no. Why are you operating out your personal account? No!
I mean, some people don't know, and then
Yeah,
I guess some people are just it's a lot starting a business, so I get it,
yeah,
but that's why we do these type of lives,
yeah,
type of content, so that we can help people, be
yeah.
informed. But the other thing you said earlier that I wanted you to break down was you talked
Mhm,
about having proof of the things that you were writing off, so like your receipts.
mhm.
So I know back in the day, it's easy to just have all of the hard copies of the receipt,
Yeah,
maybe just put them in a file or something every time
mhm,
you get them. But nowadays, we're in a very digital world.
yeah.
So does a digital copy of the receipt suffice, or do you have to have the physical hard copy of the receipt?
So it usually depends on the auditor, but I think digital copies are fine. They're mainly what they're looking for is just the proof, the substantiation of the expense. So you said, "Oh, I spent out." Let's say you work from home and you took the home deduction, and they're just like, show me proof that what you call. So you could say, okay, well, this is how much my mortgage is, and I did a percentage of the mortgage every month, so I took that deduction. This is how much mileage I drove. I took a picture January 1 of the mileage. I took a picture December 31 of the mileage. Usually it's geotagged, or you do a mileage log. You have an app. You log your miles. Basically, looking for some type of substantiation to say, hey, this is a valid expense. This is a valid deduction. And so there's not like they don't give you, oh, you must do this, but at the same time, it's just, it could be at the discretion of the IRS. Is like, you know, is
Yeah,
that a
like I
little
guess
janky
if
or
the digital receipts look suspicious or something or
right.
look
Right.
fabricated,
It's
maybe.
gonna it's gotta pass the scrutiny test. It's gotta pass the smell test. Like for instance, if you give let's say you pay tithes to a church, right? Usually they're going to give you a receipt every time you pay. So you just submit that receipt as opposed to saying, "Oh, well, I gave cash." Okay, well, then the auditor might ask, "Okay, so you gave them cash." All right, yes. Well, do you get paid in cash or do you get paid direct deposit? I get paid direct deposit. Okay, so when did you take the cash out? Oh, well, I just, randomly take cash out. Okay, send me your bank statements. And then they're going to go through and they're going to look at when did you take cash out, you know, and see if it'll match up or if it'll explain away, like, oh, well, they're taking cash out every Friday, Fridays before, Saturday or Sunday, depending on when the person may go to church, and they put cash in there. Okay, that could be substantiated as opposed to, well, you said you gave $600 in the month of January, but you have no ATM withdrawals. So, and there's no ATM withdrawals in December, and there's no ATM withdrawals in November. So, how did you give this cash? Did you receive cash from somebody? And if you received cash from somebody, who did you receive? So it's like kind of like those things, like being able to show, yes, I paid this expense. Yes, I'm entitled to this deduction. Here's the proof. When you give things away on the form 8283, it's basically if you give non-cash contributions over $500, you're supposed to fill out that form, and you're supposed to, if it's over $5,000, it has to be appraised. And so it's one of those things where it's just like, you give something to Goodwill, they give you a receipt. You give something to this, they give you a receipt. So, just making sure you keep those things, whatever they give you to show, I gave this, keep that, whether it be digital, whether it be by hand, take a picture, you're just trying to substantiate that what you're saying on your return is true.
Okay.
Yeah.
Now, I know you mentioned the word audit a lot, and that's
Yeah.
like the boogeyman to most people. Ooh,
Yes.
audit. So,
Yes.
um, from your perspective as a
Mhm.
tax attorney, when somebody gets notice that they're, going through an audit, how is it as scary as most people think to go through an
It can
audit?
be scary if you don't know, you're not sure why it's happening. So one of the things that I tell people is that if you get paperwork for an audit, read everything. Read it. And if you don't understand it, go to the IRS. And they're like, well, I called them on the phone. No, I didn't say call them on the phone. I said go to the IRS. They have what we call taxpayer assistance centers. And at these taxpayer assistance centers, they have people who will sit down and talk to you about the paperwork you receive from the IRS. You have to make an appointment. So yes, you're going to have to make some effort. You got to figure out, where there are. I know in the area we live in, there's three. So pull them up, figure out when you want to go. They list the times. You can go on iris.gov. You can figure out where they're at. You can see the times. You can make an appointment. They'll tell you what they can do in that office. And so if you get information and you're just like, oh, so you go and you say, look, I don't understand what this is saying. And they're going to tell you, well, you're being audited and this is what they're auditing. And this is this. I mean, because it'll explain it to you. But sometimes, it could be, you know, the wording could not be the best, or, you're just like, you're so freaked out that you can't hone in on what exactly they're asking. And so go and talk to somebody, go ask questions. That's why these taxpayer assistance centers exist, is for people to come in and, talk to them. And because a lot of people just want to call on the phone, and I'm just like, it's the federal government. Let's be real.
Yeah, and then you have to wait in those long lines on the
Right,
phone for hours
right.
before somebody get on the call.
Exactly. So look up the nearest taxpayer assistance center,
Okay.
look at what services they offer, make your appointment, take your stuff in there, show up on time, because if you don't show up for your appointment on time, they'll move on to the next person, and ask all the questions. Try to prepare ahead of time what questions you want to ask so you can get everything answered. And there you go. Now, smaller towns, you're probably going to have to travel to the next larger town, but in a metropolitan city, you got at least one. You got at least one. So just look it up and go talk to somebody, rather than I'm just going to ignore it, because you don't want to ignore it. No, you don't want to ignore it. And usually when there is an audit, it's not saying you did something wrong. It's just saying, hey, we're just auditing this. We're trying to make sure that it's, what you're claiming is correct, that the income is correct, and that the deductions and tax credits are correct. And there are times where people go through an audit and it's just like, here you go, and they're like, all right, and
Yeah,
this is IRS is just like, okay. And then
yeah,
there are times, but unfortunately, we tend to hear about the bad audits,
yeah, the real
and so
bad
that
ones.
scares people. And then when it's portrayed on TV, it's just like you're sitting in this room with all these receipts, and it's just like, yeah, no, they're calling you on the phone. They're saying, "Hey, this is what I'm doing." They're taking notes. They're doing other stuff, and it's not as scary as it is, unless you done did something you ain't supposed to. And then yeah, I
Yeah.
can see how that could be that could be scary.
But on average, would you say that there's a price range that people should stay in when they're trying to, or let me back up a little bit. Do you think people should go into an audit with an attorney, like a tax attorney to represent them, or is it even necessary?
I think it depends on, after you speak to the taxpayer assistance center person and they're telling you what they're auditing. I think it depends then if you need to go and seek professional help with the audit. Simply because it could be something simple as you claimed a child tax credit. Okay. Just prove the child is yours. Well, you got their birth certificate, you got their social security number, you got your birth certificate. You gonna go pay an attorney $500 for them to tell you to give them the birth certificates?
Right.
No. So once you figure out what exactly they're auditing, then it could be like, oh, okay, now if it's something, like, oh, it's your business and we're auditing this and we're auditing that, and you're just like, I'm not exactly sure how I would even begin to give you this information or what information they're looking for, then yes, go talk to a professional. There are a lot of lawyers who will give you a consultation for free or for a minimal cost to say, hey, especially if it's something quick, but I think it really just depends on what is the nature of the audit, because some audits, I wouldn't say don't waste your money on trying to hire somebody simply because what they're asking for you can provide. But if it's something that you feel like I don't know if I can do this by myself, then sure, go and speak with someone, a professional in that area, just so you make sure that you're following the rules. Because the biggest thing with the IRS is stay in communication with them. Do not ignore them.
Okay.
Hold on one second. So yeah, so stay in communication with them. Do not ignore them. Ask questions, especially when you get someone on the phone and you're speaking with them. Ask as many questions as you can. What's next? How does this all work? What do I have to do? What are you specifically looking for? How do I send? Like, don't be afraid to ask 50 million questions, because then you can prepare yourself in order to successfully complete the audit with no issue. So yeah.
Yeah. Okay. So that makes sense. So when people go into an audit, is it more of like a courtroom hearing where you present evidence, or is it more informal where you just kind of having a conversation with the auditor?
Well, depending on what type it is, it's usually pretty informal. A
Okay.
person that I knew who did auditing, they called people on the phone and just said, "I'm so and so calling from the IRS. You've been chosen for an audit. I'm going to send you this information. I'm going to verify your address, and then we're going to like that. I think the way they do it is they send out a letter, and then the people have to call in, schedule an appointment, and then they just sit there and they have an appointment. You can go in. They do have times where you can do it over the phone with some of them, and some of them you can go in, and you just go in and you're basically having a conversation. They're going to ask you some questions. You're going to answer the questions, and then they'll tell you, okay, this is what I need from you. This is how long you have to give it to me. This is the type of information that you can provide, documentation you can provide to me, and go from there. Um, if you want, like I say, if you want, you can always bring in a professional with you. You do have that right. That's in the Taxpayer Bill of Rights to have someone represent you. But usually they're pretty informal from what I hear. So yeah.
Okay. All
Yeah.
right. Now this is my first time hearing about the what's it called? The taxpayer bill of rights. Tell
Yeah,
me
yeah. So
about
there is
it.
a tax. Yes, there is a taxpayer bill of rights. Yes, if you can just go to iris.gov, and it basically says what your rights are as a taxpayer. And so, and then TAS, Taxpayer Advocate Service, they help when, hey, I have been calling the IRS. I have been trying to work with this person. Nobody's calling me back. Nobody's getting back to me. Nobody, I don't know what's going on. Taxpayer Advocate Service are there to help. Now, their thing is if you've attempted to try to make contact, they want you to try to work with the IRS first before you come to them, but they are there. They're independent. They're there to assist you, because it's just like, we've dealt with government entities before. Sometimes people just don't do their job and they don't call you back and they don't do what they're supposed to do. And you need someone to go in there and kind of, So, yeah. So, but yeah,
Okay.
so the Taxpayer Assistance Center is a great resource. Go in there, talk about what information the IRS is giving you. Taxpayer Advocate Service is a great resource when you've tried and, you're coming up short. So, yeah.
Okay. Now, I know we talked about a lot already and we're almost
Mhm.
wrapping up, but I want to know some of the things that maybe I didn't ask. If you have, say, 2 to 3 things that you feel like are most important for business owners to pay attention to when it comes to taxes.
Yes. First thing, who prepares your taxes?
Okay.
I cannot say this enough. Every person who files a tax return on behalf of another person as a preparer must have a PTIN. This is a preparer's tax identification number. It is issued by the IRS. If somebody is preparing your taxes, whether it's individual or business, and they do not have a PTIN, run the other way. If they say, "What is a PTIN?" Run the other way. Don't do that.
Okay.
Um, this is mainly for individuals, but it could be for those maybe who are filing Schedule Cs. No one can tell you how much money you're getting back without knowing your tax situation. No one can tell you how much money you owe without knowing your tax situation. So if you have people saying, "Oh, I can get you this or I can get you that," or "If you owe this amount, I can make it go away," you don't know my tax situation. So how can you confidently tell me what you can do when you have none of my information? I'm gonna tell you how they can do that. They're going to do some creative accounting on your return in the hopes that you don't ask them to explain it and you just sign it and send it in. And when it gets audited and you have to, they see that, oh no, you can't have this. The only thing that you can do is report them as preparer, because they do have a preparer penalty, but the IRS is still looking at you. There isn't, well, I didn't do it. No, but you signed it. Yeah, but I didn't, but you signed it. And that's going to be their thing. You signed it. So always, always, always make sure they have a P10 and make sure that they're willing to go over your return with you line by line. Because if they cannot go over your 1040 or your 1120S or your whatever form you have to file, if they cannot sit down and go over with you line by line, go somewhere else. Because you need to know what numbers they're plugging in, and they should be able to tell you, I got this number from here. I got that number from here. I got this. This is why this number is this. They should be able to tell you what those numbers are, where they came from, and why the end, if you owe money, why you owe it, and if you're getting money back, why you're getting it back. And if they cannot explain that to you, no, don't sign every time. Don't do that because you are ultimately responsible for that. This one is specific to parents. You have college age children and you are claiming them on your return. When that college age child files their return, because if they've made enough money, they could possibly file a return. Make sure whenever they go to a preparer that they check can be claimed by someone else. And the reason why you want them to do that is because if you are claiming them, when they file their return and get whatever refund back, and then you go to file your return and you try to claim them and they haven't checked that box, it's going to reject your return. And the only way you can claim them as a dependent is if they file an amended return. And you're like, okay, well, they file an amended return. Well, the minimum time for a minimum return can take up to 16 weeks. 16 weeks is 4 months. So if
Mm.
they filed their return back in February and it's already been accepted and it's already been paid out, if they go to file an amended return in March, we're looking at March to July. Your return is due in April. Oh, well, I can file an extension. Yeah, an extension is an extension to file, not an extension to pay. And a lot of people get that confused because they're thinking, well, I can file my extension to October, so I'll have to pay to October. No, 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 no. Your tax is due April 15th or another day if there's federal holidays or something like that. Your tax is due April 15th. But you can file an extension to file. And usually that is for people who mainly, you're going to get you're probably going to get a refund. But if you have to pay, they expect you to pay April 15th and then just say, I'm going to file later. So, so it's one of those things where it's like, make sure that you are educating your children when they go off to college, because especially if they're not going to a college near you, they're going far away and they have a part-time job or they're going to be filing a tax return, that whenever they file the return, that the preparer checks they can be claimed as dependent. I volunteer for VITA to basically do tax returns for free for people. And so one of the things that I always do when I have a college student come in is I say, are your parents claiming you this year? And Lord, as always, I don't know. Pick up the
Right.
phone. Pick up the phone and call them right now. Call your mom. Call your dad. Call somebody right now. And they're like, okay. And then they get on the phone and they're like, are you going to claim me this year? Yes. Why? Well, I'm getting my taxes done. And so usually at that point, it's just like, yeah. So parents, tell your children if they're getting their return done, check, and you're going to claim them. Now, if you're not claiming them, you don't have to worry about it. But if you're going to claim them as a dependent, they have to check that they can be claimed as a dependent. Same goes if you're claiming an other dependent. Let's say, maybe you have an elderly parent or you have a relative or somebody that you're taking care of and you can claim it as a dependent. If they have to file, they need to check that they can be claimed as well. And
Okay.
then my other one is hold on, I lost my train of thought. Let me look at my notes. Give me 1 second. Oh, 1099 influencers, content creators, we've got an influx of these type of people making money.
Uh-huh.
They're no different than, your LLC people, your escort people. You still have to file estimated tax payments too. Working for DoorDash, working for Uber, getting money from YouTube, TikTok, you still have to make estimated tax payments. And if you don't make your estimated tax payments, you will owe a big amount of taxes at the end of the year and you will get hit with a failure to pay penalty. So even though you're like, well, I'm a content creator, I don't have a business, you are your business.
Right.
So you need to get with a tax professional and start making estimated tax payments. I know a gentleman in my Korean English language exchange. as a side business. He's like, oh, I owe money in taxes. And I'm like, did you make estimated tax payments throughout the year? Well, no. He's like, well, I don't owe. It just says I owe self-employment tax. And I was like, yeah. So we have multiple types of taxes. We don't just have income tax. We have income tax, we have self-employment tax, we have the tax that you pay on retirement. Basically your schedule two is basically additional taxes. And so it's a whole list of other taxes that you have to pay outside of income tax. And so when, your income tax liability may be zero, but your self-employment taxes is where you owe. And the only way to reduce those are through federal withholding that you may have paid through another job, or estimated tax payments you made, or refundable tax credits. And so if you don't have any of that, then you have to pay that, even though technically you don't owe any income tax. So it's very important that if you're doing 1099 contractor work, you are making estimated tax payments. And I always try to tell people, out of your net profit, not your gross, out of your net profit, put anywhere, depending on how much it is, anywhere from 10 to 30% to the side. If you're driving for DoorDash and you're making $600 a week, take $100 out of that $600 and put it to the side to make for your tax payments. You may not have to use the entire amount of it, but you need to do something, because getting hit, you're making $600 a week, getting hit with a $2,000-$3,000 tax bill at the end of the year is not something that that you've planned for. And now you got to start making a payment plan. And now, it's just you got interest and penalties. And it's like, it's better to just put the money to the side now, put it in the interest bearing account, just let it sit there, and then use it to pay your taxes off too. And I believe that's it. That's my spiel,
Yeah, you
double
did
check who,
good. Thank you. You
yeah,
gave us a lot of good
double check who's doing your
information.
taxes.
Mhm.
Don't fall for the okie doke. People are, they prey on people during tax season because they know people want these huge tax refunds. And I'm just like, it's not worth it, because in the end, you get caught and you paying back money, and now they done garnish your wages. And heaven forbid, if you actually work in government, if you work for the federal government, they'll garnish your paycheck. If you work in, it's not worth it to get extra. Don't fall for it. Like, get what you owe, or pay what you owe, and then stuff like that. Oh, last point. When you are doing parents, my train of thought came back. So with the child tax credit, um, you can have a refundable portion of it too. When you are claiming your children as a dependent, the year they turn 17, that child tax credit goes away and you get other dependent credits. So, like now, I think the child tax credit is $1,700 per child, right? So, from 16 back, you can be eligible for that 1,700 depending on what your tax liability is. It's a non-refundable credit, so you only get what your tax liability is, right? Once they turn 17, and it doesn't matter if they don't turn 17 to December 31st, the year they turn 17, that child tax credit goes to other dependent credit, and that $1,700 drops to 500. That's a
Mhm.
$1,200 difference in what you thought would eat up your tax liability. So when you are filling out your W-4, it's important to make a distinction if you want to still claim head of household as opposed to single, because head of household, they will take out less money because they know you're going to get that higher standard deduction. But if you claim single, then they'll take out more money to try to eat up that difference. Or you can still claim head of household, but have them take out more money because of that difference that's going to come out. And so a lot of parents, unfortunately, the year that child turns 17, they get that gut punch, and they're just like, last year I got $3,000 back, and this year I'm only getting 1,000. Well, your child turned 17, so that $1,700 went down to five. And that's it. And it's the year they turn 17. So that's another thing to look out for when filling out your W-4, what your tax status is going to be, and understanding that once your child turns 17, that child tax credit, it drops
Drops in.
drastically. Yes.
Okay. Well, that's good to
Yeah.
know. I had no idea about the 17 thing.
Yes, it's
My
the
baby
year
girl
they
got a
turn
little way to
17.
go, but
Yeah.
yeah, we'll keep that in
Yeah.
mind.
Yeah. And
Well, I'll
so,
tell you, Attorney Michelle, you did wonderful. You gave us a plethora of information that I'm sure
yeah.
we all could use. So thanks for joining with me today. We'll probably have to do a part two so we
Yeah.
can get into some more stuff. Did you have anything else that you wanted to share before we go?
No, I think that's it. But I can go on for hours and
Oh, I
hours. Like,
do.
don't give me
I
the
have a
mic.
question. I have one more question for you. I know you're a
Mhm,
tax nerd, so you focus
mhm,
more on the laws.
mhm.
What's your favorite tax law?
Ooh, 1031, like kind properties.
1031?
Yes, IRC 1031. So this is an oversimplified explanation, but basically, if you own a building and you get the building, right? And so let's say you buy the building, we have your basis. Your basis is I bought the building and it was worth $100,000. Well, over years it appreciated and now it's worth $1 million. So if you sell it, that's a $900 million. That's a 900,000 gain. Well, there's a thing that we have called like kind exchanges where basically you can end up exchanging that building for another building. And basically, it's a way to put off paying taxes on your gain for like an insane amount of time. Like, it's just when you get into the thick of it, you're just like, so this is how they do it. This is how the upper echelon avoids paying, or because tax avoidance is legal, tax evasion is not. So you
Okay.
can avoid paying taxes. You just cannot do tax evasion. And there's a very thin line between tax avoidance and tax evasion. So tax avoidance, legal. Tax evasion, no. So that's how they got Al Capone, tax evasion, because IRC 61, whether you get your money legally or illegally, you owe taxes on it. An ascension to wealth is considered income. So doesn't matter how you got your money, it was an ascension to wealth. But I like 1031, and then I also like the stepped up basis. And I like that because it really helps with kind of creating a generational wealth type thing. So, you got a whole bunch of boomer parents who bought houses in the 70s, in the 80s, or like the silent generation or whatever. These houses, they bought them for 20, 40, fifty
Right.
thousand dollars, now worth $400,000. Well, in the stepped up basis, if that house is left to an heir or a person or whatever, they step into the basis of 400,000. So if they sell that house, they don't have to pay taxes on that income because they just get they don't have to pay taxes on a gain. Because you think about it, you buy the house for $50,000, you sell it for $450,000. That's a $400,000 gain. That's that's income. You have to pay tax on that. But with stepped up basis, and like I said, this is a very oversimplification of it. With stepped up basis is a person steps into the basis that it is at. So, for instance, my father, he passes away, he leaves him his house. His house is worth $450,000. He paid $150,000 for it. So if he were to sell it when he was alive, he'd have to pay taxes on $300,000, give or take. If you didn't take the IRC 127 thing about the 250, but that's a whole nother thing. So let's just say he doesn't do that. He'd have to pay money on that. But he passes away. He leaves the house to me. I step into his basis. So now my basis is 450,000. So if I sell this house that is paid off at 450,000, technically it's not income to me because my basis is
So
same.
you
So
wouldn't have to
those
pay any tax liability on the sale
yeah. So
of
like I
that
said, it's an
property.
oversimplification of it, but basically stepped up basis allows you to step into the basis of it at the current fair market value so that you don't have to pay taxes on the gain. Yes.
Okay, we got some
And it's
comments
really,
in
it's
here.
really, yeah, it's a really like it's like wow. So like it's just like wow. So you can avoid paying those additional income taxes because you're paying taxes on the gain. Income. It's an ascension to wealth. It's income. Now, does that rule out other taxes? Maybe, maybe not. But in this particular instance, I could pocket $400,000, and it's
Right,
not
right.
income to me. I may have to pay taxes on a different kind of way, but it's not the gain that I got. I don't have to pay taxes on that. So yeah, I like that.
Wonderful. And then what's that? Is it a certain associated rule for that the
Yep.
stepped up basis?
So stepped up basis, if I'm not mistaken, it is IRC either 1012 or 1014, but don't quote me on that.
Okay.
Like kind exchanges is 1031. So yeah.
Okay.
Yeah.
Well,
Yep.
let's read some of the comments. We got some good comments. Says, "Hi, Candace, my favorite lawyer. Mwah, thank you." And then we got Philly Jones, two beautiful black sisters. Thank you, Philly. And then Philly Jones says that Attorney Michelle knows her stuff. Yes, she does. That's right.
Well, only two things are guaranteed in life: death and taxes. So
So you should know those taxes, huh?
it's
I just
like, look, I'm
cannot. I
recession proof.
Yeah, I cannot. I be staring at them codes, falling asleep, getting bored. I'm like, look, I
Yeah,
can't
I
do
am.
this.
Well, I learned very early in law school that I like code-based law. Like criminal law, torts, I hated that because it just, you had to tell a story and then it's just who can tell the best story and who can take the facts and make them. And I'm just, is there an answer? Code-based law.
Right.
Can I do this? Can I not do this?
Yeah.
Bankruptcy. Can I do it? Can I not do it? Tax law. Can I do it? Can I not do it? So I learned very early on I like code-based law. Like there's an answer. I may have to read 50 million sections to get to the answer because
But
it's
it's an
like,
answer.
well, yeah, like if and then, but then here, but I was like, eventually I'll get to the, you know what, if you in this situation, yes. If you in that situation, no. So yeah.
I love it. So we got a comment asking, "Are you in Texas?" Yes, she's in
Yes.
Texas. And
Yes.
then Attorney Michelle, she just started her YouTube channel, but she's going to be posting more
Yeah.
informative videos for you guys.
Yeah.
So tell them your YouTube channel or whatever, however you want them to
So
follow you
my,
on
my
social media.
YouTube channel is not up yet because the day I went to go make it, YouTube had that global outage. And
Oh,
so
that was that like Tuesday or
yeah.
Wednesday? I remember that.
Yeah.
Yeah.
Yeah, so I went to go make it and then I got busy, so I'm gonna have to sit down this weekend and do it. But yeah, so basically just giving tax tips because taxes are not as scary as people make them out to be. Well, they don't have to be. And I think a lot of people don't understand our tax system, the marginal tax rate and how we have different tax rates and stuff like that. So I think just providing that information can help people just be like, it's not that bad.
Yeah.
Like if
Not the end of the
you're doing
world.
stuff you ain't supposed to, it could be bad. But yeah.
Okay. Well, once you get your channel set up, just give me the
Yeah.
information and I'll pin it down in the
Yeah.
comments for this video.
Yeah.
And then hopefully next time we have you on to discuss taxes, you have your
Mhm.
channel up and booming
Yes.
and everybody can follow you. So
Yes.
thank you for joining. You gave me so much information, even stuff that I had no clue about. So I appreciate it. Every time I talk to you, it's always a wealth of information and a great time. So thank you,
Well,
Attorney
I'm
Michelle. Thanks for
happy to do
joining.
it. Happy to
Yes.
help.
All right. Well, I hope you have a great rest of your Friday,
You
and we
too.
look forward to having you again next time.
All right. Talk to you later.
All
Bye.
right. Bye, guys.
Bye.